How you doing? Patrick Hardy, real estate agent with HomeSmart Premier Living Realty here in Long Island, New York, also serving parts of New York City. All right, so you're thinking about selling your home. Maybe the kids are gone, maybe the stairs are winning, maybe you just want a place where the only thing you want to maintain is your Netflix password. All right? But before you pop open the champagne, let's talk about something that is less exciting than the early bird dinner special. Capital gains taxes. All right? But don't click away, okay? Do not click away. I promise you this will be less painful than assembling furniture from IKEA. So, what's capital gains anyway? All right? Capital gains, the best way to describe capital gains is, here's a picture, okay? Let's just say you bought a house for this much and you sell it for this much. The difference, your profit, pretty much, is known as your capital gain. And yes, the IRS would like to have a little chat about it with you, all right? The good news is, if you lived in your home for 2 out of the last 5 years, you may qualify for what's called a home sale exclusion. That means you can exclude up to $250,000 if you're single, or $500,000 or $500,000 if you're married. Tax-free. 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 That's not a coupon. That's real money. All right? The rule comes from the Internal Revenue Service Code. All right? Yes, the same folks who send letters who instantly raise your blood pressure. All right? But hold on a second. You have to make sure that you live there long enough. As I mentioned, 2 out of the last 5 years. If you've owned at least 2 out of last 5 years, the ownership test, you owned at least two years. And there's what's called the use test. You actually lived in it for at least 2 years. All right? It doesn't have to be the last 2 years. It's just 2 out of the last 5. So, for example, if you've moved in with your daughter temporarily because she said, "Mom, it'll be fun," you may still qualify. All right? And what about all those upgrades that you've made? Remember that new roof, the dormer, the kitchen remodel, the bathroom remodel, the deck that you put on, or the grandiose patio that you created, or whatever else? All of those improvements increase what's called your cost basis, all right, which lowers your capital gain. All right? So you want to save those receipts like secret chocolate sauce, all right? Now, if you're downsizing, you need to watch those numbers. A common myth is, well, if I buy another house right away, I won't owe taxes. That rule disappeared back in 1997 with dial-up internet. So you can just throw that out the window. All right? Today, it doesn't matter if you buy another house or move into a condo with suspiciously loud pickleball courts. All right? The exclusion rule is what really matters here. All right? There are special situations, though, in which you could still possibly get that exclusion. All right? If you had to move, for example, for health reasons or assisted living or unexpected life changes, you may qualify for what's called a partial exclusion, even if you don't meet the full 2-year cycle. All right? Believe it or not, the tax code can actually be human sometimes. Shocking. I know. So here's some tips for you. All right? You want to keep records of all major home improvements. Check how much your home is appreciated. Don't assume you'll owe taxes, okay? Many seniors and many homeowners that have lived in their house a long time, they don't owe taxes, all right? And you probably want to consider talking to a CPA before selling, all right? Because guessing your capital gains is like guessing your blood pressure on Thanksgiving Day. It's very risky, All right. So, bottom line, for many seniors and people who have lived in their homes for a long time, selling a primary residence results in a zero capital gains tax. Thanks to that really generous exclusion. So, what does that mean? More money for travel, more money for grandkids, more money for hobbies, or finally beating Harold at golf. All right? So, selling your home, listen, it's emotional. It's memories, it's milestones, it's wallpaper choices that we won't even discuss. All right? But with a little planning, capital gains taxes doesn't have to be scary. It really doesn't. And remember, the only thing worse than paying taxes is paying more than you have to. Nobody wants to do that. All right? So if you found this helpful, hit like, subscribe, and share it with someone who thinks the cloud is still just the weather. All right? Again, my name is Patrick Hardy. I'm a real estate agent with HomeSmart Premier Living Realty. I'm here on Long Island. Also serve parts of New York City. Feel free to, like and subscribe this video. Pass it along to other people. If you have any questions, feel free to reach out. Have a good day.